Our next guest says that if the European Central Bank does not increase its bond buying program from here, Europe will eventually sink into a recession and drag the United States down with it. Joining me now, Stuart Eizenstat, partner at Covington and Burling and the former U.S. ambassador to the European Union, also spent some time as a deputy Treasury secretary. Stu, given that what we saw overnight, the deal, the fiscal compact, is this the beginning of the end?
They needed to do four things. They needed to create a fiscal union to complement their monetary union, and they've taken some steps to that, but it'll take months for that to be accomplished. Second, they needed to recapitalize their private banks, and I think the European Central Bank here has done the right thing. It's going to give basically unlimited 3-year low-interest loans with less strict collateral to the private banks. That will help a great deal. Third, they needed to create a real central bank, a lender of last resort. This they have not done. And they needed to put in place pro-growth policies, because this is a mutual austerity pact at a time when Europe is already sinking. And this they didn't do. So they've taken some steps, but not sufficient.
So does this mean that we cannot, and investors cannot, expect the European Central Bank to step it up here and take a Fed-like approach to the crisis?
That's correct. They are getting closer to that because they are buying sovereign debt from Spain and Italy, but they're not saying, which they need to say, that we will buy an unlimited amount to make sure that these countries can go into the private markets at reasonable rates. They did lower interest rates. That's a good thing. They're going to contribute to the European Financial Stability Facility. That's a good thing. So Draghi is gradually moving in that direction, but frankly, it's still not enough. And at some point, the markets are going to react. They're going to challenge the debt from Italy and Spain, and the European Central Bank is going to be forced, I think, to take more dramatic action. And now that they have this fiscal pact in place, they've got the cover to do so. So really, this is the time to step up and say to the markets, we're going to stand behind our member states' sovereign debt. They've done that with the private European banks, and that's very important.
We just showed a video of David Cameron at the meeting in Brussels, clearly distinguishing himself and the European Union from the Eurozone and the 17 nations. Is this a significant divorce we're seeing between the two?
I would call it a significant separation. Europe has always been, for the UK, a sort of strange experiment. They've been part of it, and yet they've tried to withdraw from as much as they could and not be fully integrated. They benefited from the single market, but they have not wanted to join the euro at all. I think what this does mean, however, is that the euro, which was intended to unite Europe, is actually going to cause more divisions. And you saw not just the UK, but some of the Central European countries like the Czech Republic also decide not to join this. So you're going to have a Eurozone group and a non-Eurozone group, which already existed, but now it will be more distinguished, with the Eurozone group taking on these strict rules and oversight, and the non-Eurozone countries not being willing to cede that sovereignty to Brussels.
While all of this was taking place, Treasury Secretary Tim Geithner was on a plane back home. Why did he go, and did he accomplish anything?
He went for the right reasons, and he's gone now about 4 times in the last couple of months. I think he's gone more to Europe than he has to Congress, and rightly so. He's played it right. He's played it privately. He's said to them the kinds of things that need to be said, which is you need a fiscal union, but you need pro-growth policies, and most important, the European Central Bank has got to make it unmistakably clear that they will stand behind not just the private banks, but the sovereign debt. So I think he did accomplish some things, but he can only do so much. He was right to do it and right to try. He made some, I think, partial success in pushing them in the right direction. I think the European Central Bank is moving in the right direction, but we don't have time.
All right, moving in the right direction, but not enough time. Thanks for joining us, Stuart Eizenstat, partner, again, at corporate law firm Covington and Burling and former U.S. ambassador to the European Union.